Hello, my name is Hercules, and this is my Fin 332 Viva. I covered tournament behavior in Indonesian funds, an event-driven strategy based on Trumpism on Canada in equities, and bond portfolio management in 2026. I will explain my answers to each of the questions as follows. In question one, I analyzed Indonesian mutual funds and ETFs and mutual funds at the end of day. So basically, anyway, there is no intra-day price discovery and no market maker. ETFs, by contrast, continuous trade continuously on exchange with maker participation and transparent intraday pricing. This structure is dif is structural difference is a central idea of my strategy. ETF CPI values fluctuated but did not provide any meaningful significance, not because of managerial risk shifting from CPR. Um, but the continuous trading structure amplifies the index volatility through creation and redemption flows as per the paper. This is why I use ETM for momentum execution rather than a CPR signal generation in the Indonesian fund market, in the Indonesian market. On question two, I traded Canadian stocks via CFDs on capital.com and over-the-counter derivative market, where the platform acted like a counterparty. This structure had a bid and ask spread, obviously, and the financial structure led to information asymmetry in which Donald Trump had provided in a section 301, which is basically a trade announcement on its current research on advanced change in tariffs. So I repositioned myself based on that. And for my fourth question, the bond portfolio operates in the corporate bond market where the price discovery dealer is dealer driven rather than exchange based, and liquidity varies significantly between short dated investment grades like Toyota 2027, which I included into my portfolio, as well as Microsoft, which had a maturity of until 2057. Uh, for the market microstructure is most directly addressed in question two through my analysis of adverse selection, slippage, and information asymmetry across my 12 demo trades. The Section 301 investigation was on March 12, 2026. I entered all positions on March 25th, which was a 12-day delay, using the analysis from my cumulative um, abnormal return analysis. I I noticed that there was a short-term drift that the price in institutional investors began to change before the official announcement date. This is due to Trump usually providing information on what's going to happen in the future on his own Twitter page. Um, so, uh, so the slippage was measurable. The financial sector CFD spreads had an estimate of 11 to 17 base points per trade in effective entry cost. Uh, so the energy trade sector, I invested in energy trade sectors, and which had lower slippage because of the domestic energy as a tariff, and also because of the current situation we have in Epic Fury with Operation Epic Fury, um, and it had not reached an institutional consensus, meaning a less crowded order book and tighter spreads at entry. Three stop losses were triggered during my trading, and I also did not include a take profit because I was waiting for profits to get realized beforehand, as my analysis showcased that car the most of the intraday change resulted before the event analysis. So in order to get a significant profit, I invested beforehand, and I'm waiting for the change in the microstructure. And in for the final one of the final learning objectives, um, all three questions involve portfolio construction and performance analysis. Question one, the portfolio strategy is momentum long short overlay on Indonesian conventional funds due to its high significance in its signal of 9-3 CPR window, which is basically a winner gamble in conventional funds, which was found from 2024 onwards. So I long positions with target first half winners. This included Scrodo Dana Prestasi Plus and Ashmodana Ekodistas Nusantara, which are basically Indonesian conventional funds, which has a 5-star rating on Morningstar. While I shorted the target interim losers after the period at using a BHS style, the whole period is 3 months. The strategy is currently a wait and hold posture due to being only in quarter 1 2026. In the second question, the 12 trade portfolio is explicitly sector allocated based on car differentials, short financials and exported industrials, long energy, safe haven commodities, etc. Because of the current war. Performance was evaluated using AR and CAR across 17 windows prior to the event and after the event, going up to 180 days before and 180 days after. I found the most significance 5 days before the event was officially announced, maybe due to insider information and information in asymmetry. In question four, the bond portfolio evaluated duration, modified duration, and convexity. The convexity analysis reveals asymmetry return. The portfolio gains around 2.76 million, 100 BPS rate when but decline, but loses only 2.67 from the from an equal increase. This is done to my interest sensitivity analysis, which I included in my report. Uh, so the risk is managed through a short treasury future outlay in for the first half to compress effective duration from the 2.89, which it originally was, to 2 during peak rates of uncertainty like right now. While the report I individually submitted is a collaborative of everything that I have learned over this period, I would say that these three questions best uh, taught me how to a fund research be a fund research analyst and identify behavioral alpha and CPR models. So basic and an event driven macro trader, then executing and managing 12 life position using a fixed income portfolio manager. So these are the kind of things I learned doing this. And each role I utilize different types of tools and learn how to utilize Excel or other information and trading and utilizing uh, different sites for my entire overall uh, report. Thank you.